So how is it that business owners can get a huge infusion of cash from the government to buy rental property that they never ever have to pay back? Hey folks, over the next couple of minutes, I'm going to share with you a program through the government where business owners can get a huge infusion of cash. I mean, just outright cash given to them that they can use for a variety of purposes, but one of them is to buy rental property so that when you long after your business is gone, or you've sold your business, or you've left the business, whatever the reason is, now you have another source of income that is providing passive income for you over the years that the government paid for, basically, right? And so you definitely want to take advantage of this. But I know you don't want to become an expert in government programs. So just drop a comment down below or hit the message button or DM or wherever you're watching this, however you can connect with us. Hit that on there and send me a message, and I will share with you exactly the right sources and all that stuff of where to find out the details about this program. My name is Anthony Nitz. I've been helping business owners or people buy and sell investment properties for over 25 years. Over 1,200 properties. I just stopped counting after that. And I've been doing it for a long time. And I have to tell you that this is one of the best sources of income, in my opinion. I think that this is a great source of income for you so that you can buy these rental properties better than any other program that I've ever seen out there. So let's get into it. Again, I'm just going to kind of share with you this program. Again, whether you own a business or not, you need to stick around and listen to this, because maybe you know a business, and this is nationwide, by the way. Maybe you know a business that could use this program, and if not, then that's fine too, but at least you know. All right, here we go. So the program that we are referring to is one that you probably have already heard about, and it's going to be one of those things, if it's not already, it's going to be a little annoying to hear about it, because it's called the ERC program, the Employee Retention Credit. I know, hold on a second. You've heard this 1,000 times. You hear it on the radio all the time. You hear it on TV. You hear it's all over the internet. For God's sakes, if you punched in ERC into a Google search, you're going to be inundated with ads, because now they know you're looking into the ERC program. The challenge is figuring out what is the right source. How do you know you have the right information? How do you make sure that you're not falling a victim to a scam? And I'm going to share let me just kind of explain to you really quick why you're seeing so many ads and all this stuff. And this is simple, because the ERC program is one where in order for me to, it's giving you free money. Okay. So if I, as a business person, said to you, I was sitting around and I go, gosh, wait a minute. If I can give you, the business owner, free money, would you just, break me off a piece of that? If I do the work, I do all the work, and then just one day a big giant check shows up on your mailbox, would you pay me for the service that I provided? Because otherwise you're not going to get the money anyways. Right? I mean, why not? And most business owners, that's a smart thing to do. They're going, yeah, let's do this, right? And because of this, it has become what I'm referring to as the new California gold rush. There's so many people who are getting into this because it doesn't really require any credentials. You don't have to be a CPA or an attorney or a bookkeeper or anything. Anybody, you, the business owner, you could file for your ERC claim. It's not a good idea, and I'll tell you why, based on my research of what I've done, because I've looked deep into this thing, just to, because as being in real estate, like I said, I've been in real estate for 25 years. Here's my website. You can go, take a peek if you want, just to verify that. But being in real estate for as long as I have, I'm always looking for ideas and ways to help people leverage real estate in one way or the other, and this is one of those programs. It's a great program where you can get up to $26,000 per employee, and I know way too much about it. If you want to reach out to me, like I said, drop me a line. We can talk about it, and I can share you some of the details so that you don't fall into the pitfalls of the program. And anyway, you can get this $26,000 per employee, and it is cash money that is sent to you. It's actually a form of a refund from the government, so it's not even really taxable. It could adjust your payroll taxes if when you receive that money, because you have to adjust payroll taxes accordingly if you use certain funds from your payroll, when you did PPP, when you did other things. So make sure your CPA is involved. Although based on what I've learned, I'm telling people don't even bother with having your CPA file it, because this is a specialty thing. It is a unicorn. It is one of those things that it has accounting elements to it because it's called an employee retention tax credit, but it's not really a tax thing. It's sort of a payroll thing, but payroll companies don't really want to touch it. They'll do it, but they're not putting their best effort into it. It's really a specialty thing. There's only a very few handful that I have found that are truly really qualified to handle this. Anyways, so there's a couple myths around it too. So if you have heard of it, if you haven't heard about it, good news, you've heard about it now. And I'm going to give you some resources that you can go check out if you want to look deeper into it. If you have heard about it, you're going, okay, well, I tried to qualify in the beginning. I didn't qualify, or my accountant told me I didn't qualify. Well, you have to understand that there was a change. There was a change in December 2020 with the Consolidated Appropriations Act that was filed, or that was created, went into effect in March. And what it said was that if you qualified for PPP, you can now also qualify for ERC, because back then it was a one or the other. It wasn't, you couldn't do both. Everybody always went for the PPP because it was way easier to qualify. Under ERC, it was, hey, you have to prove a significant decline in gross receipts. And that was the only way that you can qualify. Everybody went, we'll just get the PPP because we know it's going to be forgiven later. They got the PPP, but now you can also get this, which is more money than what you could have gotten from the PPP. ERC is more money than what you could have gotten from the PPP. Just do the math. How many employees do you have, right? Up to $26,000 per. So that's one myth. I had a PPP loan. It was forgiven. I didn't qualify, or I didn't qualify in the beginning. Okay. The other thing is I made a profit. If you made a profit, that's not a significant decline in gross receipts. And so, how do you, so you wouldn't qualify at that point in time. But again, that changed. Said, yeah, if you profited, but as long as you meet certain criteria, there's criteria you have to meet, but it's not difficult at all if you know what you're looking for. And that's why I say these specialty companies, that's where they come in big time. Okay. And the next thing you need to know about it is that, first of all, yeah, it's confusing. Like I said, there's a lot of moving pieces to it. There's 6,000 pages of legislation that goes onto this, and because you don't have to have any credentials, because everybody's like, oh wait, I can come to you as a business owner and say, give me a percentage. You mean if I do this, if I file this for you, then I'll get a percentage of it. And as a result, there's, I'll just call them scams, because there's a few different types of scams. There's the outright, hey, give us money and we'll take care of it from you, and then they disappear, right? There's those happening. There's the scam where, somebody who is absolutely not qualified at all to be filing for you says, sure, I'll fill out a form and send it in. And if it works out, okay, we'll send, we'll get the money. And then I'm going to call this a scam, and I'm going to do this loosely. And it's all the CPAs, all the bookkeepers, even law firms, all these people who are jumping on this thing. Cause again, they're going, hey, well, we're professionals in the financial arena, so we can file for this. But again, what we're finding is that, what I found in my research is that a lot of them, they're not getting you the full return that's due to you. Okay. So if you're going to use this money to buy rental property or anything else that you want to use it for, because there's no restrictions on how you can use the money, then you probably want to, again, have somebody who has been doing it, who has been doing it from the beginning, who has done thousands of them. Okay. And I'm going to give you, here's a perfect example. I was talking to a client the other day, and he owns a company. He had about 18 employees. And I said to him, I go, well, hey, you know what? You should really talk to the company that I have been communicating with. He said, oh, okay, great. Well, I'm going to go talk to my CPA about it. I said, great. Yeah. Connect, have them work with the company to get all the information. But the CPA got all agitated and was like, no, that's not, they're charging too much and that's not ethical and blah, blah, blah. And my question back to him was, wait a minute, what's ethical? The fact that this program was available for over a year now, and you, the CPA, never ever mentioned it to your client, you think that's ethical? And now that it's being brought to you, you want to charge them $5,000 to file it for you, and you haven't even done one? That's ethical? No, that's not ethical. So I'm trying to make this point. And if you're a CPA and you're watching this, sorry, I'm not trying to hurt anybody's feelings. What I'm trying to say is find out who is doing it. And like I said, I'll give you these resources. Use those resources and get the most money you can out of this. Go buy rental property, right? If you're here in Orange County, California, go buy rental property. I'm happy to help you find it, okay? There's no population's increasing, and they're not building enough homes fast enough. So, and then, just what is the best use of the money? Because this is one of the cool things about this program. This is what makes this program so great. It really is that as long as you have W-2 employees and you qualify, you meet all the criteria, you're going to get this money. There is no restriction whatsoever on how the money is used. If you remember with PPP, it was you had to use it for, 60% had to be used for business and payroll expenses, right? Well, you can use it in any way that you want to. Those checks show up, you go cash them, you go buy that rental property. You want to blow it on a vacation and a supercar, you could do that too. Probably not the best use of the money, but because you can do that if you wanted to. So, anyways, like I said, you probably don't want to become a government expert, so. I'm just going to share with you the sources here. I'm going to throw some QR codes up on the screen here. And if you're a real estate agent watching this too, definitely you should be able to making this available to your clients. So if you're a business owner, let's see, wait here, let me look on the screen here. Click on that or scan that QR code or just type in that URL. Okay, and it'll take you to the one company that I have found that is just doing, it's kind of cool because when if you fill out your information on it, it'll ask you the questions. How many employees did you have? How much, this, that, and all the other details, the criteria that they need to calculate. And then they can give you an estimate right there. You don't even have to talk to anybody. They'll give you an estimate right there on the page. It says, well, based on what you entered, you're probably going to get a check for, $483,000. Okay. Now, obviously, that could change once you submit all of your documentation and they start, going through and doing the full analysis. It could change, but, it's a great way to give you an idea. Gosh, is this worth it? And I have not found a case yet where it's not worth it. Not one. Okay. If you're an agent, let's see, wait, how do I do this? Okay. There, right there. I'm looking at a screen that's kind of backwards. So agent, if you want to promote this, you can click on that URL there. Yeah, there we go. You can enter that URL or you can scan the QR code depending on what device you're watching this. If you're on your phone, obviously you can't scan the QR code right there, but you can do it. And I'll put these links down in the description down below. Anyways, I put this up because, okay, great. It's ERC. You've heard it 1,000 times. But again, I think that it is an amazing program. If you're not taking advantage of this, you absolutely must. You absolutely must, because if you don't take advantage of it, that money is going to be left there. And when the program comes to an end, which it's actually coming to an end, relatively soon, or portions of it, you're going to start losing some of that money the longer you wait. If it's left there, who's going to spend it? The politicians, right? Do you want the politicians to spend that money? No, I don't think so. They're just going to waste it on garbage that's not important to you or your family or your friends or whatever's going on in your life. So anyways, just curious about your comments and things like that. Go ahead and put comments down below and let me know what you think. And we'll talk to you soon. Take care.